We've seen this dozens of times before in the short life that Bitcoin has had. But first, the depressing thing for all of us, and frankly, it is just that. Let's just put this in context. 100 grand since 2011, when Bitcoin basically, over the last 5 years, you got a three-bagger in Apple, 6 million, 2 in Tesla, 3.7 billion. Now, let's say you didn't risk 100. You said, I'm not going to do that, or that's a lot of money. You risked only 10,000. You'd have 370 million bucks in your pocket. How about if you risked 1,000? 3-4 million bucks. Nothing's like this. Yes, there are all the analogies to the South Sea bubble, to the tulips. There's no rate of change ever in any of the data that is like this. But let's look at the current sell-off. Here is, now this is important. If you do an arithmetic chart, the thing looks like this. You can't even analyze it. But if you do logarithmic, nonlinear, it puts the rate of change in perspective with preceding moves. So if I put the percentages on here we go. Now, what do you see? This is since inception. Down 31, down 38, down 93, down 39, down 25, down 70, down 67, 73. So in that context, what makes this different? Now, you could say, yeah, there was just a few people playing here. Now that's big money. Fair enough. But in the context of corrections, there's nothing different per se. And if there were, then how did all these happen? I mean, this is just right in the percent. We have ones that are 93, 73, 67, 70, and this is only 33. So let's look at the here and now chart just to put this in context. This is over the past year. I mean, these are remarkably uniform. 25, 25, 31, 33. And if you were to draw a trend line, for what it's worth, today we checked back almost perfectly, and after being down a lot more, it did close well, and we sort of bounced off this top of the channel. If you're not involved and you've wished you had made billions, take advantage of this and put $1,000 bucks in it, or a little more.